Hello, everyone. Welcome back to the trading room. I'm Shane Vernier, and this is our Forex market scan. We're going to trade the PCE Price Index, which is coming your way tomorrow. So we did a little bit of work on our technical issues from yesterday. I sure appreciate everyone getting involved and at least staying around for yesterday's broadcast. It was a challenge. We had audio problems, we had video problems, we had drop frames. I'm confident that we're going to do a little bit better today. I did a lot of testing, but if we do go off the rails, I'll just have to pause it and do a reset and see if we can get it up and going again. So looks like the audio levels are good. It looks to me like we're going to have an opportunity here to have a stream. So that's absolutely fantastic. I want to welcome everybody back to the trading room. It's been a good week. It's been an interesting week, sort of a slow week, but still a good week. It's a great time to be working on your game. It's a great time to be looking for 2026 and really reevaluating what you did in 2025. Had a fantastic conversation with a trader earlier today. It was really great. I went through a lot of markets, looked at a lot of trades and a lot of different things that, everything from technical analysis to psychology. We covered it. Really sort of pointed out what the growth and development as a trader really is. And one thing I would say about December's trade, I understand we need money and we need to make money. And if you don't have money and you don't have money coming in from trading, it's hard to justify doing it. Believe me, you'll be able to make more money in just a few weeks in January than you can sitting there all through December. Now, that being said, we've got about another good week of trade. I think tomorrow's going to be a pretty good trading day. But as you can see in the equities markets, especially here in the United States, they're dead. They're rotating up. They're rotating down. We got a decent move on Monday, and that was about it. The rest of it, I mean, if you're picking a direction, like you notice, I don't show you my contest results anymore because I took a directional move. I was looking for short. I basically shorted across the board, looking for a sell-off going into the Fed meeting, and it's been quite the opposite. The problem is the markets really haven't moved. Aside from crypto, I mean, there isn't really much going on. So in my view, if you're looking towards, great trading ideas or you want to get involved, especially in the Forex, it's a challenge right now. Don't let it get you down. Maybe if don't want to trade right now, spend your time evaluating, reevaluating, going over what you did for the year, what you need to do in 2026. Set some goals. Look at your performance. Decide the way forward. I mean, there's plenty of time to do this. You've pretty much got about another week of good trading that I would recommend considering taking risk. And after that, it's going to get pretty thin pretty quick. And what I mean is you're just not going to get the moves. And when you do get the market to move, it's not going to move with any sort of rationality. And we've got to have a lot of liquidity. We've got to have good market depth or else we're in big trouble trading. So not necessarily the best time to be in the markets, but we can still make a few bucks, and we're going to do just that today. We're going to point out some trades, go over some trade ideas. That dollar CAD trade I really like. I think it's going to be a fantastic one. It's coming our way. All right, everybody, good to see you. Tina, good to see you. Tina, welcome. TM, good to see you. T, hello, Shane. Hey, Lewis, how you doing? Ralph H, good to see you. Ralph, Lita, always a pleasure. Lita, Bobby, Bob, and Tuku, welcome. A lot of familiar faces in the room. And that's absolutely fantastic. Okay, let's get on with the show. Today is going to be sort of an interesting type of a session. We're going to go over some Forex pairs. I'm going to go ahead and preview the PCE Price Index and what exactly we need to do. And we've also got to go over where you can find some of these new videos that we're putting out. I know a lot of you don't follow us on Switch Markets on YouTube, and that's fine. But I'm going to go over and show you where to find our newest videos and what's going to be coming out relatively soon. So let me see. T Marina, exactly what I've been doing, Shane, adding to and updating my trading plan. I think it's a great time to do it. Remember, you don't always have to be trading to be working as a trader. You don't. I would be, this month is big for analytics, thinking about where we've been this past year and where we may be going next year. I've already got some ideas and some market calls that I'll put out there towards the end of the year that I think are going to be pretty tough to beat for 2026. We'll get to those when the time comes. But you definitely want to be aware of your performance over the past, 11 months if you've been in the market that long or however long you've been in the market. Performance matters. You need to be able to quantify exactly what you've done. You need to make sure that you don't make the same mistakes twice. And that's what this is all about. That's what the room, the streams, the analytics, the trade ideas. I'm showing you sort of a look into my playbook and what I'm looking at in the markets. And maybe it's not what you're seeing, and that's great. Do something else. Go a different direction. We don't always have to be in agreement. I get messages every day from a lot of you, and a lot of it's like, okay, well, I'm going long this market, and Shane, I know that you probably wouldn't sign off on that long, but I was looking just to get a little bit of money out of the move, and I said, hey, listen, there's nothing wrong with you being long and me being short, or me being on the sidelines, or you being on the sidelines and me being long or short. It doesn't matter. What matters is that you're executing trades according to what you want to do. I'm here to try to help in a support role as best I can. I'll show you my playbook, and maybe you agree, maybe you don't. That's all right. The biggest thing you have to remember in the markets, and you've got to remember it, and I can't stress it enough, there are a million ways to make money, maybe even a billion ways. There's so many different ways. No two traders. I mean, there's a lot of traders that are alike, but we don't all have to be the same. I can be long, you can be short. We can still make money. It doesn't matter. So believe me, I'm here to sort of give you a little bit of input. If you have anything that you need to know, definitely reach out, and I'll do my best to help out. And if I don't know, I'll tell you I don't know. But we've been around for a while, so we know a little bit. No, we don't know everything, but we know a little bit about what's going down right now. Andrea Garwal, good to see you, Andrea. Welcome. All right, everybody, let's go ahead and get out to let's start with a trade idea, trade update, support zone in play for the U.S. dollar, Canadian dollar. This one's coming our way. You can see right here this sort of a nice support zone that's developing right there between that EMA at 139.27 and the 38% at 139.10. That's a big deal. I like that zone down there. I like it a lot. So if, in fact, we do get an opportunity to buy those 14s or 15s right in that area, 139, I would love to play a pivot, a nice bounce off of 139. That's a pretty good trade for us. Now, there's going to be a debate. Shane, did you already miss the boat? Your EMA was at 139.27, and the low was what? 139.25. That was established earlier today. One thing that I like to do with multiple time frame analysis is I will take a monthly I'll take a monthly moving average, something like this, a 13-period EMA. Okay, we're going to go right here. What's the low? The low there's 139.27. All right, we're just going to leave it at 28. Let's take this right down to a 30-minute chart and see what's happened. It's a beautiful thing. I mean, realistically, the moving average is at 27. You went down, tested that support zone, bam, rallied right up, and that's absolutely what we're looking for off of a long-term level. I was asked earlier today, just straight up, Shane, how do you go from a long-term level to a short-term time frame? And I go just like that. Exactly what I did right there. I marked the level on my monthly chart, and I go down to the 30-minute, let's take it down to a 1 minute. The idea there is that moving average is going to be downside support. Were there bidders there? Yeah, buddy, they were. Came off hard. We're coming off hard right there. We based. Where did we base at? What's the low? 25. We based at that quarter handle and then rotated up. So I could have been a little more aggressive with that trade idea, but I'm still confident, still very confident. I believe our entry point is somewhere right down in here, right around 15 or 14. I believe it's 14. So that zone right down in here could be a pretty good one. I call that a shade, and that means that we're just going to add a few pips to our support zone, and that's going to give us a bid entry, and then we're going to take a few pips from our resistance zones, and that's going to give us a shorting entry. Interesting stuff right there. Let's get on out to gold. I know a lot of people are asking about gold. Potentially just a great trade, and I'm going to go ahead and run the fibbies on the daily here in a second. But this trend line, trend lines don't have to be hard. This game doesn't have to be hard. That's a textbook 2-point trend line, weekly chart, weekly high, all-time high right there. Pull back, retracement, bang, right there. You hit it again. 45. It's probably not a 45, but it's something like that, right? I don't know. I was told there would be no math. There would be no geometry. Hey, I know a little bit about fractals and wave counts. I don't know about geometry that much. I can draw a triangle. I can draw a bullish trend and a triangle, so I know what a bullish pennant is. Other than that, I'm not a geometric whiz, that's for sure. And guess what? You don't have to be either. You just have to understand a few different patterns, the way the market moves. That was sort of the big discussion that I had with the trader earlier today. He said, Shane, do you have any hacks or any tips that you've learned over the years? And I said, understand market state. Number one, study your losers. Always study your losers. But number two, understand market state. When a market is trending versus when it's flat. And if you can do that, you can go very, very far in the markets. It sounds easy, but the sooner you understand something's trending and the sooner you understand something's dead, that's really what this is all about. That's the Holy Grail. Yesterday, we took a trade, a 5-minute trade on what was it? Crude oil futures, excuse me. It was a crude oil futures contract on a 5-minute trade. Basically was that piranha idea where you're going to buy a lower Bollinger and sell the upper. We took it during a flat market, and it was a really easy trade for 8 ticks, 7 ticks. It may not seem like much, but that's real money. That's real money. That's tangible money in your hand. That's $70, $80 trading crude oil futures. That bam, you take that, you put it in your pocket, and you go about your day. The only reason you can make that trade is because you understand market state. Well, here we understood market state. We knew that, okay, bam, that's a trend. Okay, that is a trend. Flattened out, but here's the deal. This isn't necessarily completely flat. Last week, completely flat, but this area right here, nice pullback, significant pullback, rallied up and put in that second touch of that trend line. Third touch, it's all about the third touch. Maybe I'll write a song. I mean, that sounds like an old Commodore song, or maybe an old Motown song here from the United States, The Third Touch. Well, there it is. Right there, you go up and hit it. One of two things is going to happen. That's either going to be topside resistance, and we're going to sell off and stay bearish, or you're going to break out above it. You break out above it, it's pretty bullish. And so, the big question would be, well, Shane, where's the big move this week? Maybe it doesn't come this week. Maybe it comes next week. Maybe it comes right before the Fed, maybe after the Fed. We don't know. We just know we're in a pretty good position here. So the basic trade idea was this. We go to the daily. The idea was, hey, let's look at a Fibonacci retracement sequence on the daily. And what did you have there? Spike low right there. It's a nice swing low. And you can see I was working with the pendulum earlier today. Let's go ahead and get my golden zone back going. And there you go. In any case, right there, what do you have? Spike low, spike high, pull back, 41.72. That's a beautiful thing. The low right there was what? 41.75. Wow, buying quarter handles works. 42.13. You're up about $38 on this bid. Now, full disclosure, we didn't highlight that trade yesterday. Maybe I missed it. It could have missed it. But what we were looking at here was our weekly, what we wanted to get accomplished on the weekly time frame. Spike low, spike high. And there was our intersection down around 4,125-ish, that quarter handle. That's robust support. But 75 was a beautiful thing as well. So a lot going on here in the gold market. I'm still bullish, although, the volume's definitely dried up. I think I could build a really strong case for the top side of that market. But, it's pretty good stuff. I gotta admit, I mean, trend lines. Right? Trend lines. There's a million different ways to trade. That's what I try to stress on these streams. I don't care if you're a 920 crossover trader. We're going to look at a couple of those, a Fibonacci trader, a market structure trader. We may pull a time price offering chart up again and see if we can't get something done. Maybe do a little bit of scalping towards the end of the stream here. See if we can make a few more dollars because the markets are relatively calm. It may be a really great time to do something like that. Let me see. We've got some markets here in the live chat. I'm way behind. Tay, good to see you. T, can we check out the Australian dollar, US dollar, and the dollar yen? Absolutely. Tina, you definitely know a lot. What is about the Nikkei? I'll take a look at the Nikkei as well and the US 30. All right, we got a lot of markets to look at. Fantastic. Let me see. T Marina, specifically the US dollar, Japanese yen for a potential swing trade. All right, we'll look at the 920 on some different time frames, and then we'll look at Fibonacci's as well. And want to check out the Australian dollar, USD, since it's tied to gold. That's a commodity dollar. Remember your commodity dollars. U.S. dollar, Canadian dollar. The Canadian dollar depends on what? Crude oil and natural gas. Fossil fuels, big part of Canada's economy, about 9% of its GDP. All right, when we go to Australia, we're thinking metals. We're thinking gold, not so much silver. Definitely gold. Iron ore is a big one, and copper. Copper is one of the ones that we haven't really even talked about copper. Copper's growing on me, though. It's one of those that I think could be a major, major breakout commodity here in the coming years. There's going to be a lot of demand for copper, and that's going to make a lot more people trade it. I think copper could be the next crude oil. I really do. We just got to wait and see exactly how it develops. But, yeah, I'll hit those markets up next. A couple of things I want to cover, just some housekeeping stuff before we go any further. 1 day left, one day, 5 hours, 47 minutes, and 6 seconds. That's going to be till the end of your Black Friday giveaway. Not giveaway, but your Black Friday offers over at Switch Markets. If you're a brand new trader or you haven't funded yet, check out Switch. There's a lot going on. Or actually, there's going to be a big rebrand and a big relaunch that you guys are going to enjoy. A lot of the new free tools. A lot of what we're doing with Switch right now is to try to bring this type of service suite to the forefront of the markets. And what I mean is it's not enough anymore for just a broker to be just a broker. It's not enough. What's the idea behind Switch and why Switch is partnered with How to Trade is we want to take the education to the next level. You want the resources and the free tools to be value added. Remember, even if you've already funded with Switch, you've got free access to Algo Builder, You've got free access to Pine Connector. You've got all these different things, and that's just the beginning. There's going to be a lot more in 2026. So we've got all sorts of calculators. We've got all sorts of tools that you can use over here. You just go to resources, click there, and then you go down to resources right there. Give it a click. Learn to trade. Free journal template. Market movers. Forex. It's got everything, and it's going to have a lot more, and that I guarantee you, and that's coming out in short order. We're actually right now thinking about developing a gold-silver ratio indicator, an EA that you can download and work that gold-silver ratio that you're going to learn more about. So you're definitely going to want to check that one out. for sure. Okay, and then the other thing is a lot of you don't know where to find us now. Our new videos that we're putting out. I've worked on Forex Signals TV on YouTube. We've worked at How to Trade. Put a lot of stuff out on How to Trade Calm on YouTube. This Switch Markets channel is going to be where a lot of the new stuff resides. Today we had a new video out. We're not getting very many views, but that's okay. That counter's sort of off anyways. But this is today we put out the How to Trade the S&P 500. I show you how to get involved with that. We have weekly market analysis there where we go over some key markets. We've got custom trading bots and latency, eliminate latency, market analytics, ultimate heat map, things like that, complete guide, currency strength meters, all of it. So you're going to want to check out that channel. And then also, this is where you can also find all of our live streams. So if there's ever any question of where to find me or my live streams or any of the videos of the new things that we're doing, be sure to check us out over at Switch. We're going to be live there a lot, and the amount of content that's going to be hitting the Switch Markets thing is going to be absolutely huge. So if you're interested in content and you like sort of what we're doing, be sure to check that out. Pretty good area to find us. All right, U.S. oil. I want to hit U.S. oil, and then we'll dive into some of these markets you guys are talking about. They're good ones. As far as U.S. oil goes, this is going to be really quick, short and sweet. I've been putting out my ideas, and I put things out on X, ShaneV_trader. Take a look at it if you want. I only post a few times a day, if that. But if you take a look at this oil market, I've been taking criticism from all over the world. And that's one of the things about putting your ideas out there in your market reads and things. And honestly, taking criticism doesn't bother me not even a little bit. Taking criticism shouldn't bother you at all. If you make a trade and it loses, so what? That's what risk management's for. You don't ever get complacent losing. You don't ever think it's okay to lose, but you can't take it personally. You don't take it personally. This rally in the crude oil market, I had somebody reach out and they go, Shane, you don't know what you're talking about. You've been calling for a run at the yearly lows for seemingly ever now. And I go, yeah, I have. Yes, I have. It hasn't worked. It really hasn't worked. I mean, we're consolidating right around 60 in area of fair value. The reason why is because it looks like we're going into Venezuela. And by we, I mean the United States military. I look at this and I go, wow. Look at these odds over on Polymarket now. Venezuela military engagement by December 15th now stand at 24%. That's only the next 10 days. Maduro out by December 31st. That's 15%. Definitely looks like he's gone by March. That's 50-50. Next Venezuela military engagement. I mean, you've got all these days. U.S. forces in Venezuela by December 31st. You're talking about boots on the ground. There's a 10% chance. This is why this is near 60. There's no question about it. The market is bracing itself for some sort of external factor, an external event, and that is going to be the strikes on Venezuela. No question about it. So when we look at this, we say, okay, we've already sort of got a trade idea out there for the U.S. dollar, Canadian dollar. A strike on Venezuela will definitely put that in jeopardy because the CAD will gain ground because this is going to go up. For right this minute, until we're told otherwise, I would have a very calculated risk scalp right there dialed in from about 60, 49-ish, maybe shade this a little bit to the downside, 60-40, somewhere in that zone. Pretty good scalp, but it's just a scalp. We're not going to get caught short if, in fact, war breaks out, in Central America, South America. We're not doing that. This market, if it's a slight, what's the best way to say this? There is no good war. There isn't. There just isn't. And we understand military operations and why they're done and why they're carried out. I'm not talking politics. We know this. If it's a limited incursion, meaning if it looks a lot like Midnight Hammer that hit Iran earlier this year, where it's an airstrike, blow up a couple drug factories, call it good. If that's one thing, that'll jack crude oil prices probably up 62.50, something like that. If this is a ground invasion, if it gets very dirty, if Maduro digs in, if Venezuela forces actually meet United States forces head on and you start seeing casualties being taken and it looks like it could take a month, 6 weeks, 2 months to resolve, this could be a major bullish market driver for crude oil. If that's the case, I would be looking somewhere right up to the top of this market structure, somewhere back to June pricing. 75 is a big round number I would probably look at. Could it happen? Yeah, it could happen. Is it likely to happen? No, it's not likely to happen. So for right this minute, I would be looking somewhere at around 60.49 for a quick scalp, 25 pips. That's a pretty high probability trade. You got an EMA right there at 60.59. 62% is right there at 60.49. You have an opportunity to trade that. The timing is precarious, though. That's a trade where you've got to have a stop loss in the queue. You've got to make sure that if all hell breaks loose and something goes wrong, you've got to be able to make sure that you're out because there's no rules on how high this market can go. Let's say an F-35 shot down. Let's say a boat sunk. Let's say something that comes as a complete surprise militarily. That's what'll drive this market crazy. If it's according to Hoyle and the U.S. runs some airstrikes and it's over before it starts, then you're not going to see a huge bounce. You'll actually see a bit of a bounce, and then the sell-off will come in crude oil. We're seeing supplies build going into the winter months. Now we're only 3% behind the 5-year average. After this month, you could be as low as 2 or 1%. That's going to really set the tone for a potential bear market in WTI crude coming in the next 6 weeks. But if you have problems in Venezuela and that thing boils over, there's no rules to how high that market can go. Do I believe that's going to happen? No, I don't. Would I bet against it happening? No, I wouldn't. There's too much money at stake. You got to be very careful. So that's my spiel on crude oil. I have to talk about it because we're going to be off for a few days, but I want everybody understanding the dynamic of crude oil. I don't want to get one message from anybody out there that's watching this live stream that said, well, I got caught holding shorts, Shane, from 60.49. I said, you need to get in and out. If you're going to take that short scalp, you get in, you get out. Take the money. It's there. Take the money, but don't be silly and try to hold on to something that could trend against you. And I mean, you could see $10. Back during Arab Spring of 2011, we were trading $9 ranges in WTI crude. That's what I cut my teeth on. That was my first spring in trading. We were trading $9 ranges in WTI crude. That's 900 pips, 900 ticks. It was insane. I haven't seen volatility like it since. Grew up fast, made a lot of money, lost a lot of money, made more. The ranges were huge. That same type of thing could happen if you have problems in Venezuela. So I definitely want to go on record as saying caution's the better part of valor. Be careful there. All right, U.S. dollar, Japanese yen. Let's dive into some of these markets and then the U.S. 30. Dollar yen was relatively straightforward analysis. This was one of our picks of the week for switch markets. 2025's high. Still watching that at 158.88. Nice pullback, though, break beneath last week, which was sort of an inside week, and now you got a sell-off. And so the question is do we bid now or do we wait? I love 153.20 down there. You're only another 170 pips. Why the big move for the Japanese yen this week? The BOJ says it's going to raise interest rates. That's big. That's big. I love this level. I'm sitting down there at 153.29s, 25s, 29s, 30s. That's going to be a robust support zone. If we're fortunate enough to get it, that's a really strong trade going into later this month. Now, as far as the question for a potential swing trade, that would be my swing trade idea, T. If I was going to do it, I still want to be long. I believe this is a bit of an overreaction on what the BOJ said. Most currency traders believe that BOJ rate hike is sort of baked into the cake, and a lot of that came with the change in leadership that we saw last fall in Japan. So when we're looking at making a swing trade, do you want to make it to the long or to the short? Well, I mean, we have tools that can help us do that. One of them is the 920 EMA. Let's go ahead and just take a look at it real quick here. Okay, so if you're looking at a daily 920 without all the other analysis, it's starting to set up. If you do get that cross under, we could definitely make a case to short this thing. Definitely. Right there, you've got sort of a swing high right there, that top in your RSI, which I don't really care about on a daily time frame, but still, it's extra evidence. So there's your swing high. So that would be your stop up there at 158. What would you look at? Getting the crossover and maybe taking the short. I wouldn't take that because our Fibonacci level's down there at 153-ish, 153.25. It's not a big enough payoff for us to get that. So if we're going to trade something like a swing to the short, it's got to be a shorter time frame, not a 3-hour chart, but a 4-hour chart. So what do we have here? Okay, there was your short sort of back last week, 25th of November. Not really anything setting up at this point. Personally, I would rather take the long. I think that the Fed rate cut next week's baked in. I think the BOJ raising rates is baked in. I think that you've got a great opportunity to trade the dollar yen. I probably would want to make my mistakes to the long side here just because that's sort of where the long-term macro trend is. But I have to tell you that our monthly chart gives me sort of my swing trade location, an area that I would definitely want to be focused on, and that'll be somewhere right in here. Not there. There it is, somewhere right in that zone. And that's not exact. That's a monthly chart, but right in that area, 153.25s. That's where I would like to get into this market. We'll just wait and see if it happens. All right, U.S. 30. We had several folks asking for the U.S. 30. U.S. 30 here, if you're looking at a monthly chart, I mean, it was a pretty doggone good buy, wasn't it? was a pretty good buyback in November of 2022. You did very well. Bought 34,000. Now you're up to 47,000. That's what institutional traders do. A lot of retail took it on the chin right there in April. So now the real question is for the US 30. I mean, what do we do? I mean, I look at equities and I don't really have many answers for you other than to just basically buy any dip. And that's been the plan. And it kind of still has to be the plan, until proven otherwise. Right up there, 50,000. That's going to be an absolutely huge level. So you've got to be cognizant of that. We're going to scalp right in front of 50,000. I'll tell you that's going to be a trade idea coming your way at some point. Still about 2,100 points off of that level though. So we're looking to short. The idea is going to be to take a short from just beneath 50,000. It's a strong zone. More than likely, you're going to see some two-way action up there. Until then, what's our read? Well, we're pretty bullish. We really are pretty bullish here. So if we're looking at the US 30, let's see if we can find a trade location that's decent. I'm not interested in the 920. Why? Because it's been trending forever. I would be shocked if we got a crossover. Okay, there was a cross under on the daily. It's going to fail. What did you have right there? There was your crossover. There's your coated bar. You can see those dojis make it tough, but there it is. There's your crossover. So it's funny too. Another thing that I was watching the other day, and it's sort of an observation. You notice we see a lot of dojis on crossovers. That's strange. It's fairly common to get a doji there. I find myself blowing the charts up to see exactly what's going on. So right there would have been your bid. The real question is are you long still? Probably. You had a sell right here. That failed miserably. Look, you went up, boom, took out your bar, crossed back over. It looks to me like you want to be long. So in order to be long, you got a couple of options. You can wait for a pullback, maybe a bid right there on the daily time frame. That's a pretty good trade, a swing trade for a US 30, but maybe right here. Swing low to today's upper extreme, maybe a pullback, 47,729. Pretty solid area. So, that would be one that you could definitely be looking at. Do you get it? I think it's going to be tough to get. I really do. I think it's going to be tough to get, but it's possible. It's there. It's possible. We just got to be patient. If you do get the opportunity to grab that one, though, probably a pretty good pullback there on the daily. Now, as far as the 30-minute chart goes, if we want to intraday trade, sort of what's going on. Not much. There was your sell, sort of your crazy open. Shouldn't fool anybody. That candle right there shows us really everything we need to know about it. And it's funny because we were talking a lot earlier today about, sort of a pendulum. The pendulum trading strategy is one of our price action strategies in the How to Trade trading room. And one of the things that you look at with a pendulum is ranges. You're looking for resistance and support. Well, when I see a candle like that in the early U.S. session, I go, whoa, look at that thing. That's huge. The entire United States session is traded inside of that first 30 minutes. That's indicative of holiday trading. That really does show you how dead the markets are. We're not trending. We're not doing anything. So if I was serious about maybe trading a pendulum, you got support, you got resistance. Remember, you bounce off of that level, and then you enter on the 10% above support and 10% below resistance. You already nailed that trade. That downside trade right there. I know we're doing this stuff in retrospect, and it's tough, but there's your entry. Your profit target, your first profit target is going to be 50%. Your second profit target is going to be dialed in right there to 1-to-1 somewhere. Or your stop loss. So essentially, that's your trade. You nailed it. Right there, you probably could have got long right there on the rebound. If not there, definitely there, and definitely there. So there's plenty of entries, and that's a pretty good payoff right there. So the market's very flat. That's a good trade. That's a great way to trade a flat market. There's nothing wrong with that. Nothing wrong with that at all. Say, Shane, can this one bar be the top and bottom of your pendulum? Yeah. Yes, it can. Yes, it can. Especially think of the timing. Early U.S. session, first 30 minutes. What do you got there? You got a hell of a lot of volume coming into the markets, and a New York range is established after a dead overnight. It's pretty good stuff. The best thing to do, and honestly, the other thing, is that you're getting with the prevailing trend. You're extending yesterday's trend. It's pretty good stuff. That's a very good entry, very savvy entry, and a great trade. Does the market break and make new highs? Looks like it. This looks like it's heading that way. We'll see if we crack 48 today, maybe close above 48,000. We're right on the doorstep of 50,000 in the Dow, in the US 30. Absolutely unbelievable. All right, let's see here. What about the Nikkei? Yeah, we'll take the Nikkei and then the Australian dollar. We'll look at that. All right, I don't want to get out of this coded stuff, so let's go back to my Fibonacci's. All right, Nikkei. Weekly chart, clearly an uptrend. No question about it. There it is. I mean, there it is. Going back to about April. April's tariff lows, the tariff panic of 2025. And then you get that big rally, the pullback right there to 50%. We sort of fizzled out there, and now we're moving higher. And it's one of those times when I'm sad I'm not a 50% trader. I feel terrible. I missed the trade. That's all right. You can't get them all. That's for somebody smarter than me. But you definitely look at this Fibonacci sequence and go, that's pretty tasty. Spike low, spike high. Definitely have your eyes on 49.5s. That was a nice pullback earlier this week, and we bounced since then right back up to 50. Point of control probably is 50. Big round number 50. We've traded 51. Let's see. Did we trade 50 there? No. 1, 2, 3, 4, 5, 6 weeks in a row we've traded 50. That's called consolidation and compression. Two-way action. We don't need very much else to make money. That's a pretty darn good level right there. So watch 50,000. So when we do this type of analysis, let's dial this in exactly. Because now what we're going to do is run a Fibonacci and see if we can get a buying entry, maybe a secondary buying entry that's not quite as good as 49.5. Let's go to a daily. Okay, there's your daily. Set up almost perfectly. Nice big move today. Spike low, spike high. Man, these templates always throw me. Golden zone. Okay, there it is. So that's sort of your cluster in there. You got three levels. 50% I'm not real big on. That's around 50,092. And then you've got 50,000 even. And then you got 49,854. So this area right around here, I probably would be waiting for a bit of a washout of 50. And then right there in that golden zone, look at what you have creeping up. So for early next week or maybe even tomorrow, you've got a 13-day EMA at 49.8. You're going to have some really great convergence right down there at the 62% level. Something right in there. That could be a great pullback buy. So if you get an opportunity to do that, I would consider it. I would consider it. That's all I'm saying. That thing's liable to be hot down there. Pretty good trade. All right, there's a 1-minute chart on the Australian dollar, US dollar. Let's go ahead and go to a weekly. Okay, so the key level here, clearly, and that's an old monthly level we could pull if you want, but the big level was 64. We went down a couple weeks back, tested that out. I believe we just missed entry. I had a trade idea out on that, and now we're trending. Last 2 weeks, you say, Shane, what do you mean you're trending? Well, take a look at this. Big week up, 1.45%, another 1%. So the last 2 weeks, you're up, what, 2.5%? That's pretty big for the Australian dollar. We're breaking above that upper Bollinger Band. There's a potential breakout in the offing here. So let's go ahead and get rid of these long-term levels. Let's go down to a daily. Fantastic stuff. Okay, there's your winning streak. There's your trend. You're trending on the daily. You went all the way through. Now you're trading above the upper Bollinger Band. Let's go to a 4-hour chart and see if we can get a scalp going. All right, looks like we already missed it, but that's all right. Okay, those of you that understand Fibonacci's a little bit or watched me do this before, you can almost already see what I'm going to do. I'm sort of going to do this in retrospect. There's your swing low right there. There's your spike low. Take a look at that top right there. Now, it's no longer valid because we've traded higher, but look at that. Pull back right to 38% and then a rally top side. Look at that 38%. I mean, my compliments to the chef. 66 flat, 66.02. That's a beautiful bid. What happened right there? That pullback right there, 66.03. Man, it's tight. You're only trading 66.17, but I mean, that's a lock in the shed 10 ticks. That's fantastic. So now let's just adjust a little bit. For the rest of today and maybe into tomorrow, 66.05, not bad. Not a bad area. Essentially, you're buying the 66 level. I don't hate it. Just be ready. You know, your stop loss probably needs to be right underneath that spike, somewhere in there. We could theoretically move the Fibonacci's up, but you'll see that we don't get anything done. It's too tight. You always have to have a range to work with. If you don't have a range, you don't have anything. So that's pretty good in the Australian dollar, US dollar. Bullish bias. You know, I would probably think of taking another crack at 66.05. It just really depends on when it comes online, when you get the trade, because core PCE Price Index for tomorrow is really going to shake things up. So there's sort of a good look at those markets. Hope that helps, guys. US 30, let's see. I agree. Shane is an encyclopedia volume. I don't know if I'd go that far. I've got a lot of years tucked into these markets. Let's see. Let's see. RIP. I can't pronounce names very good. Stefanovic, Patricia, Australian dollar, Japanese yen. I can see that. Say that. So let's go ahead and do it. All right. 4-hour chart, not much going there. Let's go. Let's sort of reverse engineer this thing. I like to start with my long-term ranges and work to my short. Multi-time frame analysis. Always looking at the long terms, moving into the short terms. So this right here, we've got a really beautiful sell-off. That's April. That's pretty much the extreme on most charts. That was the tariff panic of April 2025. I'm sure there's economists somewhere writing books about it as we speak. I don't know if you need to read them. Just it was a little bit of fear in the market. That's it. In any case, a big pullback, big deep pullback would be great. You're probably not going to get that. So bigger picture, what's happening on the monthly? It's pretty much been an uptrend since April. Pretty solid one. So let's go ahead and go to a weekly. See what we've got on a weekly. Not very good, but we've got an opportunity here. Biggest thing I would say is we've traded above last week's high. And we sort of peaked really above, but well, not really. We already broke October's high a while ago. So now we've traded above November's high. What do we want to do? Well, we are moving higher, north. So bullish would be the word of the day. So spike low there, and then a pullback here. 101.31, something like that. 101.25 is probably a pretty good pullback on a weekly. Right now you're trading about 102.50. That's pretty good. I mean, you're about 120 pips off. I don't know if you get it this week, but an interesting level. Let's go to a daily, and we're going to leave those Fibonacci's up just to see where we're at. Yeah, this is really difficult here. Market structure is sort of broken. What I mean is the ranges are small, and then you get a couple big ranges, and now another doji sets up. Spike low there, spike high. Fibonacci's 102.35. I just don't like the market structure at all. I'd love to see a greater range here, 101.51 to 102.87, though. So, I mean, theoretically, you could be looking to take a bid maybe from 102.35. Just be careful with it. Back into the golden zone was beautiful earlier today, 102.03. 102 clearly is a huge level, so I would keep a look at that, or excuse me, keep an eye on that. Let's go ahead and dial this down to our 920. Australian dollar, Japanese yen. Let's go and open it. Okay, that's what we want. 30-minute chart, give you a buy signal on the 920. There's your nice big gold candle, the crossover. The only issue that I would really have with this is, I don't really have an issue. It's just a really small time frame. So you're going to take a position now going into Tokyo's open. That may or may not be a good thing. As far as this right here, though, you'll notice that we were right down there, right on 30. So we were almost in oversold territory. I'm not real big on that. Let's go ahead and take a look at the 4-hour chart and see exactly what's happening and see if we can eliminate some of that noise. Okay, and we did eliminate the noise, and right there was your bid. Your bid was back at 101.67, and that was last week. So for right this minute, I would sort of be in a holding pattern. If you wanted to play that weekly Fibonacci, you probably could get away with it. It's not the worst range I've ever seen. It's not a great one, though, but it's about the last month or so of trade. 101.35. That's a legitimate launch zone if you wanted to take a long and maybe watch for some accumulation. You could certainly do that. That's for sure. So something to think about there. Absolutely. Let me see. SGK, hello. It's been a while. How's things? Things are going very well. SG, how are you doing? We're doing pretty good. We're just taking a look at what it is to trade in the holidays. We've had a lot of questions for markets today, so we've just pretty much been doing a market scan. If you have any questions at all, be sure to drop them in the live chat. I'll do my best to answer. As far as what we've got, let's go ahead and go through our weekly progression here, and I want to preview core PCE and PCE because that is going to be the big event for this trading week. Week 49, jobless claims today. We're going to review those briefly. Tomorrow's the PCE Price Index. That's a big one. We need to understand that that's going to be one of those releases that we need to understand. 8:30 a.m. Eastern is going to bring the heat. There's going to be volatility and there's going to be heat. So definitely beware Friday's that Friday morning action could be a big mover and shaker for you here in the United States and globally. So that's going to be during that London U.S. overlap. It's going to be incredibly volatile. 8:30 a.m. Eastern is when that number drops. Be ready for it. News of the day, continuing jobless claims came out earlier today in the United States. I don't really care at all about continuing jobless claims. Initial jobless claims, 191,000. That's beneath the 219 projected and beneath the 218 previous. That's big. That suggests that there was fewer people than we expected, fewer new folks going to get their unemployment insurance here in the United States. That's a positive signal. Most people believe that the U.S. jobs market is in bad shape. I'm hearing anecdotes. I'm starting to really lean that way. But the numbers, this number right here, still relatively decent in that it's at least down from the previous release, and it's also beneath expectations. 4 and 8 week T-bill yields. I was on the phone with the bank yesterday talking yields. They did not have much good news for me. Their yields are somewhere right around 3.7, which isn't quite the 4.5 that we were getting not too long ago. This suggests that we're going to see some rate cuts. That's what it's all about. Yields go down in treasuries. Why? Because there's going to be more money available in the system. So when those yields go down, we're looking for rate cuts. And next Wednesday, 6 days, no hours, 20 minutes, 15 seconds, I'll be back live with your FOMC coverage, and I'm going to go ahead and probably talk a lot about Jay Powell and everything from the color of his tie to his tone. I expect him to show up to this meeting on Wednesday looking like his dog just died. I expect him to sit there with a real long face. I don't expect him to say anything. I even expect him to be remotely a little bit combative towards the press. So this is going to be interesting. We'll get out the popcorn and cover it live for you. So if you're interested in watching that, be sure to drop by. I'll have all that scheduled up and ready to rock and roll. As far as what we have cooking for a rate cut expectation, we're looking at an 87% chance that rate gets cut. That's big. That's definitely big. It's a hell of a lot different than it was a month ago, where we were only looking at 68%. And about 6 weeks ago, it was about 20%, 10%. So definitely keep your eyes peeled. We're looking for a rate cut. This is always interesting, though. Where are we going to be, by the end of next year at this time? Going into the holidays next year, where are we going to be? We're looking for about 2 rate cuts from where we're at now. We're right here now. So you're looking to come down, multiple rate cuts. I think we're going to be somewhere right in this range, 2.5 to 2.75. If I had to guess, that's where we would be. So definitely something to think about there. If you're going to be around next week, check out FOMC Live. We'll have all the coverage of the Jay Powell's presser for you. As far as the PCE Price Index, this is what's coming out tomorrow. Remember, 8:30 a.m. Eastern. It's going to send shockwaves through the market about an hour before the Wall Street open. This number's going to hit. This is the Fed's go-to metric for inflation. They don't care as much about CPI as they care about PCE. So be ready for it. It could definitely send some action to the markets. Volatility will be afoot across everything, so be careful with it. Core PCE Price Index, 0.2%. That's what we're expecting unchanged. We're expecting it to be unchanged on the monthly and yearly. These numbers are unchanged for core. Regular PCE, we're looking for that to come in on point, unchanged for September. Maybe not. 2.8%. We're expecting it to rise year over year. Personal income's one thing. Personal spending is a number that we need to start paying more attention to. The reason why, 0.6% previous, 0.3% now. A lot of folks believe we're going into a recession. A recession is due to what? Low consumer confidence and low consumption. The United States is a consumer-driven economy. As soon as people stop buying things, you go into an economic contraction. Personal spending, it's all about how much are people spending. Now, remember, you can't really look at it and say, okay, well, it was 0.3%, and back in the 1980s, it was 0.2%. You can't look at it that way because spending is sort of relative to the price of goods and services. So you could say that a lot of the spending decreases is maybe because people say, oh, the price is too high on all this stuff. I'm not buying it anymore. That's one thing. The other reason personal spending would be down is because the availability of cash and credit have gone offline. All of it suggests economic contraction. Now, I called a recession for 2025. I said we're going to go into one. We had one negative print. We had a negative GDP print that was back in the spring after the big tariff crash and all that. I was relatively certain we were going to get a recession. We did not. GDP bounced back in a big way, and now you're seeing economic growth come in steadily. Not as fast or as robust as they would like to see it, but it is steady. So my recession call for 2025 was a complete bust. Remember, a recession is back-to-back negative quarters of GDP. It did not happen. And to be honest with you, I'm glad it didn't happen. I don't want to. I've lived through a couple bad recessions. I don't want to live through another one. They suck. They're no fun, man. They're no fun. Can't buy anything. Can't get a job. It's just really difficult. So I'm very happy that we didn't go into a recession. That is a loss that I will take all day long. I really don't care about that one. But 2025, we're starting to see warning signs. We're starting to see real warning signs. That personal spending, that's way down. That's going to be a trend we're going to be talking a lot more about as 2026 kicks off in January. So you definitely want to say that. All right, we've got a few questions here. Let me cover this last chart. I'll cover the questions, and then we'll call it good. I ran long again today. PCE Price Index. This is what I want everybody to understand in the world. And really, I don't care if you're a brand new trader or if you're on CNBC and you think you're the expert of the world and they pay you to come on and give opinions and sell things. That PCE Price Index is still at a 45-degree angle. Now, we saw inflation explode after last September, not last September, but the previous September, right before the election. We saw a 0.5 point rate cut before the election. What do you think that rate cut did? Kicked inflation in the tail. Inflation, or at least growth of prices, was relatively low compared to where we are now. So right in here, we sort of stagnated a little bit, and then it really took off. And then February and March, you sort of flatlined a little bit. Things were going in the right direction there. Started cutting interest rates again. We're probably going to get a rate cut Wednesday. If we get that rate cut, it's going to be the first of many. I would be willing to wager that the new FOMC, remember there's 12 members, they're going to be talking about different members to the FOMC beginning in January. You're going to have a new FOMC, a Fed chairman nominated and ratified, not ratified, but confirmed by the Senate and Congress. That's going to be confirmed next year. I expect them all to be really long fights. Everything's political now. It's going to take a long time to get anybody in there. But I will tell you that whoever does, in fact, get confirmed is going to be a dove. They're going to want to cut interest rates. We're already seeing that narrative really dominate the markets. And from a pragmatic perspective, you have to be very, very smart about cutting interest rates because we know that the growth in prices is very, very robust. They cut interest rates by 1/2 before the election, right there. Inflation's exploded. So let's say you cut again, and let's say you come in and you cut again and you cut again down to like 2.5. I think 2.5 is probably where you're going to wind up next year. So I would be playing sort of the left-hand side of that bell curve. If you play 2.5, what shape are your markets in? Your stock markets are probably going to be higher. Your U.S. dollar is going to be definitively lower. Commodity prices are going to be higher. Crude oil is going to be a little bit different, though. That's going to be different because that's going to have to do with a lot of U.S. supply that we're starting to see it hit the markets, and it's taken about a year under the Trump administration's drill, baby, drill doctrine. But you're starting to see those inventories tick higher. Crude oil may be the outlier, but gold, silver, those are all primed for major rallies. Now, if you don't get the rate cuts, and I'm completely wrong, well, then you're going to see some pain in equities. You're going to see a stock market that's going to stagnate and maybe come down a little bit. Personally, I don't see there's any way around at least 2 to maybe 3 rate cuts for 2026. And that should take our prime rate right down to around 2.5. That would be my guess. All right, let's see. We got some questions over here, and then we'll go ahead and call it a day. SGK, what are your expectations for the BOJ intervention rumors and the yen rate hike? Well, I mean, everything that I read from last Sunday's, my time Sunday, but it would have been Monday, I'm in Tokyo. Everything that I read was Ueda, the BOJ chief, said they're going to hike interest rates. They're extremely concerned about inflation, and it's the mature thing to do. The thing about Japan is they have just an absolutely epic debt load. I mean, the debt is probably the largest of all the G7s. And at least that's not necessarily, maybe not in the aggregate, but it is as a percentage of GDP. I believe it far outpaces everybody else in the G7 or G10. So when you look at that, you say raising interest rates is going to increase the debt service so that the government's actually going to be worse off with a higher interest rate. But that should give everybody a nice idea of how serious this inflation situation is. I'm very concerned about the United States' way forward economically. I'm very concerned. It's not necessarily a political issue with me. I don't sit there and I don't believe one administration. The policies of the Trump administration are much different than Biden, of course. We all know that. You're seeing a lot of restructuring of things in the United States that need to be done. You're seeing a lot of fraud being exposed. They just exposed another $1.5 billion scheme supposedly out in Minnesota somewhere. That's $1.5 billion. It's unbelievable how much money is being wasted. So if they could cut some waste, that's great. But can you cut interest rates to stimulate economic growth, to outpace inflation that you believe is runaway. You cannot control inflation by cutting interest rates. You're not going to be able to do it. So without a tightened monetary policy, how can you put the rabbit back in the hat? And the answer is you can't. The only thing you're hoping is that real inflation, meaning the prices of goods and services, doesn't outpace wages. Essentially, you're flooding the money with dollars. Well, Japan already did that. The Japanese already did that. That was a big part of Abenomics, which started back in 2012. And even before that, it started in 2001, where Japan was really worried about deflation. They said, we've got to get something going here. So they started printing yen and putting yen into the system and introducing it, devalued the yen, all right, made your exports cheap abroad, and then brought that foreign investiture back into the country. In essence, that's Abenomics. So when you sit here and you say, okay, should the BOJ raise rates? I am shocked they're raising rates. The history has been it's a complete rush to a negative deposit rate, just like in Switzerland. Switzerland does it for very different reasons, but the idea is to have a negative deposit rate, right? Now you're raising interest rates. So all of a sudden the BOJ is a global hawk. Everybody else in the world's cutting rates to try to stimulate economic growth, and Japan steps back and says, hey, listen, if we don't get inflation under control, we're in big, big trouble. It's the mature thing to do. It really is. Interest rates in the United States should probably go to 12% tomorrow just to try to get pricing stability back. And as much as I hate to say it, at some point you've got to write off the bad debt. You've got to write off the bad debt. Companies that are overextended, individuals that are overextended. That's called bad debt. People that can never pay back their debts. Businesses that can never become solvent again. That's called toxic. Those are called toxic assets. Back in 2008 to 12, the toxic assets were all eliminated. I know, I was one of them. I was about as toxic as it got. My industry folded. And everybody got destroyed in the construction and real estate industry. Everybody. So by cutting off all that and then doing some other things, they managed to get an economic boom going. And now we're right back in the same thing. We're right back in the same position where you've got a major bubble. There was a real estate bubble back then. There's a bubble now, no question, but this is a little bit different bubble because it looks like the powers that be are more than happy to let the toxic debt and the toxic assets and the folks that are underwater with no hope of ever getting out, they're willing to lend them more money and take them a few more rounds. And I'm not really talking about the individuals here. I'm talking about banks that are in bad shape. I'm talking about businesses that are in bad shape, all those funds that are in bad shape. When you take somebody a few more rounds than you should, you're just lending them money and giving them a lifeline when there's no hope to ever figure it out. That's exactly what's happening here in the United States. And until they cut some of that off and get some of the toxic assets off the books and maybe let some people fail that need to fail so everybody else can start to find a baseline in this economy, what I call solid ground, then you're always going to be trying to inflate away your debt, and it's a losing game. It's a losing proposition. Everybody knows it. That's why gold's at $4,200 an ounce. It just is. So to answer your question, I think the BOJ's move's great. I think it's a smart thing to do. I think it puts them in a different position and a different footing against the rest of the world. Still in a bad debt position, but very interesting. I mean, that one swung my head around. Let me see. Initial jobless claims did nothing to gold today. Instead, it went up. I guess the U.S. rate cut will overshadow it. Initial jobless claims didn't mean anything today. A little bit better than expected. Nobody believes the jobs numbers, SG. Not yet. You want to see the NFP number at the end of the year, 16th of December. We'll have it for you live. They want to see that figure. It's going to be a crazy figure, though. I don't see how it could possibly be accurate. I really don't. Let me see. Do you think, SGK, do you think U.S. rate cuts will move crypto out of the 4-year cycle in 2026, or will BTC sell off like usual? BTC is going up. 92 right now we're printing. So, I mean, this was, here's your weekly chart. There was your weekly sell. Did this thing base out? Looks to me like it did. I mean, we had this monthly chart up earlier. Everything was really based on that 85 zone. We were watching last month's low very closely. I took a risk in that contest. I said, you know what, if it sells off, it's really going to crater, and that's the move that I needed. Pretty good bounce, though, from 85. I mean, 78% of that monthly chart, right around that 20-month EMA, bounced right up, and you went right up to 62%, which is 94. Interesting retracement. To me, that shows an awful lot of bidding going into probably a rate cut cycle. I think the rate cut cycle, and more importantly, the deregulation of Bitcoin. the idea that they're going to start streamlining the introduction of new crypto assets. A lot of those are going to fail, and they're going to be frugazis. That's going to make Bitcoin look that much sweeter, but it also signals mainstream adoption, governmental adoption. You give me deregulation, government support, and low interest rates, you really can't, you got to make the bullish case for Bitcoin. So that's what I think. Is there profit taking involved? I think you already got a lot of it out of the way up at 125. So we'll wait and see what happens. But this last $7,000 bounce in the last couple days, that's significant. And it came in Ethereum too. Ethereum back up above 3,000. I really liked Ethereum to sell off beneath last month's low, and that's when the plunge would have come, and it didn't come. So I'm holding my bullish views towards crypto for sure. That's what I think. Let me see. TM absolutely cannot. No rabbit stuffed back in. No, I think the inflation thing is the inflation animal's here, and I feel bad about it. I don't know. I feel bad about it because, as time goes by and, a lot of folks try to really do the right things in life. There's a viral video out here in the United States, and it went viral. I probably should have just showed it on here, but I forgot. It went viral, and it's about an older gentleman that was 88 years old, and he was still working a full-time job, 5 days a week, 40 hours a week, or 5 days, 40 hours a week, working a full-time job, and he said he couldn't retire, and this was somebody who did the right things. Worked at GM, retired in 1999, had worked there for 40 years, was an ex-military, he was a veteran, and his pension, in 2009 or whatever, was dissolved. When GM did their restructuring, one of the things they don't tell you is when companies restructure, they dissolve pensions. His pension got dissolved. So after all that service and the saving and all the things, it still didn't matter. And I see a lot of that with the inflation. The inflation is growing so fast, and it's getting the prices are so high on everything right now that you can't save your way out of it. And I hate to tell people not to save because you need to save. You should always have an emergency fund in a way that you can always take care of yourself, at least be able to buy food and shelter, at least. And the rest of it, rings, watches, all that, private jets, screw all that. Be able to survive and have a couple months cushion. That's huge, so you can, find a way to rebound and come back. But when you talk about saving and putting things into pension funds, and imagine all the money that was held out of the checks over, a 20 or a 30-year period to be in a pension fund, and then just to have it dissolved, or to have everything in your bank account and have your bank go belly up, or maybe just have these balances in your bank account because you're just saving money thinking, okay, I got enough to live now. And, all of a sudden over the course of your retirement, all the prices of just basic living essentials multiplies exponentially. It destroys your wealth. It destroys anything that you have. So this video went viral. The guy was 88, working a full-time job, and it actually has a happy ending. They sent out they did a GoFundMe, and I think it's over $1.5 million in just a couple of days of folks just chipping in a little bit of money so the guy can retire. But the thing about it is there's so many of those folks out there now because the money just doesn't go very far. And that's a lot of the reason why everybody's here and we're talking trading, is because we want to find ways to make money that are unconventional in ways that potentially you can make a lot of money. And that's the reality of it. So that's why we're all here, is to try to outpace sort of the nature of fiat currency, which is pretty tough. Let's see. Tariffs pretty much undid everything being done to curb inflation. The jury's still out on tariffs, SGK. We don't know about tariffs just yet. I'm not going to say that tariffs are the inflationary driver. I still say it's the money supply. Let me see. SGK, what do you think of the XRP, by the way? I've been invested since 2018. Good move. XRP, I think the biggest thing for XRP is the government's going to butt out. Now you saw them settle all those lawsuits. The SEC sued Ripple and tried to prosecute them, throw them all in prison. They settled all of them. That's over. You're probably going to see a golden age for XRP because the blockchain network they have is robust. It can do a lot of things that others can't. So I would say that XRP is probably going to be a comer. I'm looking for all sorts of altcoins right now. Let me see. TM, in my TradingView contest, I got in way too late on BTC's ride this week, had serious FOMO and lost embarrassingly. I've given it all back. Full disclosure, I don't pull any bones. We're up about 38,000. I was running about 850th in the contest. Out of 82,000, I was about 878th, but it was nowhere near enough to crack in to the leaderboard. So I wanted to get in on the leaderboard. That's what I wanted to do. So we took our calculation early last week, and you can see exactly what we did. I wanted to play that breakout. I wanted to play the breakout short on Bitcoin, and I wanted to play it on Ether because I knew that if we cratered down to about 75,000 in here, 76,075, and we could get Ether, a big move out of Ether, these probably would have been a +6 and a +16. That would have given me a chance to move way up the leaderboard. And then as far as shorting, I figured let's just short all the markets and bet on a Fed surprise. And if all of them crater, then we're in great shape. Crude oil I had short too. That was a bad one, probably. Probably should have been holding longs in crude, but I didn't want to abandon my overall view, and it cost me. So that's full disclosure. I'll close probably 15,000 in the green, but who really cares? When it comes to contests, I play to win. That's not real money. I play to win those things. So full disclosure, I'm not going to sit around and go, oh, I mean, I could have cut all those trades off when they were green. They all went green, and we could have been sitting around and said, oh, I placed 700th or something. Who cares? I want to hit the leaderboard. Top 250 or nothing for me. That's the way I look at it. That's for sure. Wow, that is the rule. Absolutely. That is cruel. Yeah, it's the truth, Tina. It was an eye-opener for me. That video's viral on YouTube. You can go check it out. Just go retiree, too old to retire or whatever it was. It had like 2.5 million views in just a few days. The thing went absolutely viral. That's for sure. As a company in their vision, yeah, it's got a happy ending. The guy's got 1.5 million now. That's pretty good. Trading is the easiest and hardest job. Absolutely, Tina. You're right. Fiat currency soon comes to an end. I think that maybe during my lifetime, Team Arena. Maybe during my lifetime. My highest P&L was plus 10K, but lost it all. Futures is so scary risky. I like futures. Futures are fun, especially when you're trading with real money. God, it stacks up fast. Let's see. Now currently 89,000 balance. You can't beat that. Oh, currently negative. Oh, negative 89. Hey, at least you went out swinging. That's the way I looked at it. I said, well, I can sit on this 40 grand profit and show everybody, see, I can do it. I can do it. I already know I can do that. I wanted to see if we could get lucky and maybe win that sucker. Yeah, I think it's called Too Old to Retire. Let me look real quick. It's pretty sad, though. I mean, it'll bummed me out. Yeah, I don't know. I don't see it, but just it's viral. So just say 88. Just go through and Google it, 88, or go to ChatGPT. 88-year-old veterans too old to retire, or too old can't retire, something like that. You'll find it. All right, everybody. I'm gonna go ahead and sign off. We've got an hour again. It was good stream. Our stream schedule, I'll have it up for next week. For the next several weeks, we're gonna have Fridays off. So I'm gonna be doing live streams Monday through Thursday next week. And then the following week, we're going to do Monday through Thursday. And then we're going to go into the year-end break. And then we'll be back after the new year on January 2nd, I believe. So it's sort of the end of the year holiday break, which is great. This is like the first year I think I've ever taken time off at the end of the year. So in that regard, I'm looking forward to it. But it's always hard to be out of the markets. But this time of year, we're going to go hard next week. We're going to go hard, probably not as hard the week after. We're going to go hard next week, and that's going to be about it. So the big thing to remember for this week, tomorrow, be careful. Core PCE, 6:30 a.m. Eastern, 6:30 a.m. my time, 8:30 a.m. Eastern. You got to be ready for that. You definitely want to do that. That's for sure. Team Arena, my 100,000 to start is now 89K. That's not bad. You only lost 11,000 in a week. I lost 3,600 in one trade in gold last summer, and it happened in like 10 minutes. So that's not bad, T. That's not bad at all. All right, guys, I'm going to go ahead and sign off. You have a fantastic trading session. If you need anything, head on over to howtotrade.com and send me a private message and let me know. And remember, you got a day left on that Switch Markets Black Friday deal. If you're a new customer to Switch, they'll hook you up. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.